Hi, this is Mani from BSc to NSE.com. In this video, I'm going to talk about open interest analysis based on options data, and typically I'll show you examples from Nifty to kind of explain. And the first point, I want to go through these points before I show you the example, and we discuss about how to infer based on the open interest analysis data. And again, like everything else in the stock market, nothing is for sure just because you have a particular data and you tend to try and figure out what is happening. Markets can always break it apart. So again, the same goes true with open interest analysis as well. So some of the points here, point number one, I'm just mentioning that in the out of the money contracts, sellers are normally smarter than the buyers, because obviously out of the money contracts is always the premium is only the hope premium. The price has not crossed those levels yet. So it's normally the buyers who are hoping for a big bang move and waiting for a movement to come. But typically the sellers will be normally smarter. They would do their analysis and decide that certain levels are not going to get crossed, and they're going to try and sell the contracts there. And typically buyers will be rash in behavior in the markets. They'll kind of keep predicting that it's going to cross 500 points, it's going to cross 600 points within the next 1 or 2 days or 3 days, and so on. And they're going to put their money on the table, betting in a risky manner. Whereas sellers are normally smarter by nature. Sellers normally are required to bring in more cash to the table and look to collect only around 4%, 5% returns a month. And they normally do their analysis well as to where they should short, so that they can short and hold till expiry and make use of the fact that the options is going to become zero. So sellers are normally smarter, and in the markets eventually the person who's playing with lesser risk is going to win consistently, and which is the same here. Buyers normally go for the high risk, high reward kind of trade, and in option selling, since the margin required is high, it's the sellers who are going to actually play the safer strategy and who actually end up being smarter. The misconception is that yes, option selling does mean that there's unlimited loss potentials, but the possibility of that happening is very, very less. So again, the second point is basically that you need to watch for change in open interest in out of the money contracts in options to see where sellers are stepping in more aggressively. Obviously there are also more buyers in those contracts, but like I said, since sellers are smarter, buyers are always there in the market, because you only need very little amount, like let's say 2000, 3000 to become a buyer in a particular contract. But in Nifty, to become a seller in one contract, you need 35,000 rupees. So normally it's the sellers who are less in numbers, or they need more cash to bring into the table. So when sellers are stepping in more, then that's when the open interest also goes up. Obviously we need buyers, so there will always be buyers, like I said, to step into a contract willingly. But sellers to step into a contract, they'll have to do their analysis and make sure that the trade is safe before they step into a trade. Obviously we need both buyers and sellers to step in to increase the open interest. So like I said, we'll watch for change in open interest and try and figure out what that means. And the third point is the open interest analysis becomes stronger as the time tends to go towards the end of the month, or the third week and the fourth week of the month, because start of the month there's too much of time, and there's that much amount of time for the buyer, and that much amount of time for Nifty or any other stock to move. And there's also some external factors which can come and help the price cross certain levels. So the options open interest analysis gets stronger and stronger as we head closer and closer towards expiry, because the buyer's hope will begin to come down and the seller will become smarter and smarter in his analysis. And number four, irrespective of whether you are a buyer or a seller in options, Looking at open interest that's happening in option space is very important for both, because even as a buyer you want to find out where the support or resistance is based on open interest, so that you can square off your position or book profits at those levels, rather than avoiding pullback and erosion of premium. So for a buyer, you also tend to get where exactly you want to book your profits. For a seller, it shows you where others are aligned, where others are betting that certain levels will not get crossed. So it's that much more important for a seller as well. So now to get into some actual data, so you can see here I've taken this data and put it in an Excel sheet from nseindia.com. I've ignored the 70, 50, 7150, the contracts at ending at 50s, because there the open interest is not much. So to show in the video in a very clear format, I've just taken it from nseindia.com and put it in an Excel sheet. And to give you a picture of what's happening in Nifty currently, is for those who may be watching this video after 6 months, you can see that Nifty through this month has dropped from 7900, you can see on the right, 7920. In the last 1 or 2 weeks, Nifty has been constantly bearish on China concerns and crude oil going down. So this is a Heikin-Ashi chart of Nifty, and you can see that even the current trend is negative, and I would say it's a doji formation today, which is formed below the flat top level of yesterday's candle. So the trend still stays negative because Nifty did not close above 7493. So this is the current scenario where Nifty has been constantly coming down, and today in fact Nifty had risen through the day. I can show you Nifty intraday chart today. Let me load a 5-minute chart, and you'll see that Nifty had in fact gone up through the day. Here you can see this is Nifty intraday chart through the day. Since morning it was constantly going up, even though sellers at various points did push it lower, but eventually the price did go up. So let's see, on the daily chart the trend is negative. Intraday it had bounced back. Let's see how the open interest had changed. And like I said, at the top you can see left side is call options, right side is put options, and I have just chosen certain columns like open interest, change in open interest, last traded price, and this is the percentage change, and then the strike price, and then the net change, LTP, and change in OI and OI. So OI and change in OI are the two things that you want to watch here. And you can see that the background marked in pink, these are all in the money contracts. The backgrounds which are marked in white, they are all out of the money contracts. So you can see here that currently when the day ended, the maximum open interest in the out of the money contracts is currently in 7300 put, which is around I think 71 lakhs. And on the call option side there's not so much of open interest, but if you put together there's close to pretty high open interest here. On the other hand, here if you see, apart from 7400 put and 7300 put, the other put options have very little open interest. So most of the open interest is focused on 7300 put, which means that sellers believe that before expiry Nifty is not going to drop below 7300. So again, that is the current assumption. It just means that as of today, so overnight, let's say tomorrow, crude oil inventory data comes in extremely bearish for the crude oil price, and that creates a panic, then Nifty may breach this level and go down also, wherein on that day the open interest scenario will totally change. So as of today, we see that the traders believe that 7300 will hold on the downside. Similarly, if you see change in open interest, now this is open interest, we saw that even a call option didn't have as much open interest as 71 lakhs. So only the put option has so much of open interest, obviously also because today markets recovered a bit. When it comes to change in OI though, you can see that the 7300 had the max among put options OI addition around I think this is 3 lakh in open interest added into 7300. If you don't understand what change in OI or open interest is, I think I made a video on open interest earlier, so go and watch that. But the maximum change in open interest today happened at 7500 call. You can see 6 lakh open interest got added into 7500 call, which is out of the money, but not by too much of a distance. And like I earlier showed you, the daily chart reversal level on Heikin Ashi is also at 7493. So this potentially just meant that while Nifty went up today, a lot of option sellers probably kicked in hard into the 7500 call option, taking the opportunity to sell it. And this obviously means that a lot of sellers did get in here, and even twice as much as the open interest that got added into 7300 put. And you can see that the open interest has reduced in 7700 call and 7900 call. That is because the premiums are very, very less. So people who would have already sold would have been booking profits here, the sellers mostly. So this is a scenario, and I think 7500 call over the next few days, if the spot price does not cross 7500, more and more sellers will keep adding open interest here. So currently the scenario, it looks more like the expectation of Nifty within the range 7300 to 7500, and I would expect Nifty to stay in this range mostly, unless it has to be an outside positive, some positive news has to come in, which was not already factored in, which will come and push the markets out of 7500 on the upside or below 7300 on the downside. So this being the case, currently I'm holding 7500 put and I'm marginally in profits. So for as a trader who's playing the trend on the daily chart, since the trend is negative, the logical choice for me would be to book profits as soon as I see the spot price moving towards 7300 or closer to 7300. And at that time, if the open interest is still getting added into 7300, if it's not unwinding, meaning the open interest does not become negative, and the sellers are continuing to add more open interest to 7300 put, then I should definitely book my profits as a buyer holding 7500 put. So that is something as a key takeaway for a options buyer here. And I would say that as Nifty gets closer to 7500 and not closing above it, then you can go for, as a buyer, you can go for a put option, because you know that the range is between 7300 and 7500. So make use of that fact and try and buy a put option at that time, and try and again square off when it gets to 7300 or close to that. So again, this thing will keep changing every day, so you may want to track it every day, what the open interest has changed, and you will get a fair idea of the overall market expectations in the next few days based on the way that the open interest is aligning itself. And like I said earlier, start of the month, there's too much of time available, so I would expect that the possibility of levels getting broken is pretty high. But towards the expiry, as we move towards the expiry, the last 1 week, last 2 weeks, open interest becomes that much more important, and the possibility of it giving you pretty accurate levels of movement of Nifty will be that much more higher. The possibility of failures will come down. And I think I've made a pretty long video in this one already, so I'll finish up the video. Subscribe to our YouTube channel and post any questions or any queries on this video, and I'll get back to you as soon as possible. And join our trading group and go to bse2nse.com to do that. That's it for now. Thank you. Bye bye.